Tesla's earning report is set to be released in a few hours, so should you buy the stock? Keep watching as we go through recent news as well as Elon's own prediction along with my chart analysis and price prediction. But before we do that, subscribe to our channel Stocks 101 for regular stock market updates. First up, Elon Musk has given a delivery estimate which is bound to shock long-term investors. As said by Elon, Tesla plans to get to 20 million deliveries per year by 2030, which means about 15 times the current deliveries. If this is true, it will result in almost $1 trillion in revenue and hopefully a valuation of $6 to $7 trillion, indicating 8x growth. Next up, as Musk closes in on the Twitter deal, investors might get a discounted buying opportunity. The deadline for the deal is 28th October and Twitter has decided to freeze all employee stock for the time being as well. Apart from this, BYD has delivered 4 times more vehicles than Tesla in China, which isn't the best news. Tesla sold about 318,000 vehicles in the first 3 quarters, whereas BYD sold a shocking 1.2 million vehicles. With all that in mind, let's analyze the charts. As you guys can see right here, we're now in the 1-day chart for Tesla, and of course we'll first analyze the 1-day chart, then the 1-hour chart, and turn it off we get to the 5-minute chart. But right off the bat we can see that we're getting indecision as of 19th October because the earnings report is all set to be announced. And of course this is what happens before an earnings report is announced because, both the sellers and buyers don't really know what to do, right? The buyers are betting that the stock will go up, which is quite obvious, right? That's common sense. But we're kind of converting this into a pin bar candle, right? So the buyers are picking up pace and they're expecting that the earnings report will be positive and it will beat analyst expectations. Now, if you ask me, if I'm being completely honest with you, I honestly kind of doubt it, right? I don't really believe that the stock will beat the earnings report at least for this quarter, right? They might just be at par with the analyst expectations. They might underperform slightly, they might overperform slightly, but it's not going to be such a big surprise that sends the stock flying. Of course, if we talk about market conditions, we all know that, the treasury yields are at an all-time high, or rather, well, not an all-time high, but a 14-year high. And now we can see that the stock is going up to a level of $222. It will probably get resisted over here around $223. Right, so we'll just see what happens, and by that time I'll quickly explain the market situation to you, right? So with rising treasury yields, we probably will get a deeper bear run. So in my opinion, the bear run probably won't end by 2022's like last month, so that's December I believe, or at least up until the Black Friday sales start hitting. We might just see some short-term reliefs over there, right? So November and December might give us some short-term reliefs, but I honestly doubt that the stock will get into a recovery phase so soon, right? So we already broke the $206 range, right? Why am I marking this over here? Never mind this level. Just think of it at $206. So if we get back to that level and if we are able to break it, right, that would be bad news. And of course, if the earnings report is negative, we'll probably break it with our next support aligned at $182, pretty much 182, right? But again, if you ask me, well, we're probably not gonna break $206 again because that is a very strong range that has been set by both me and Bank of America. So with that, I don't believe there's much left to analyze in the 1-day chart. So let's quickly jump into the 1-hour chart. So this was when we were doing our previous analysis, right? So it was over here. I already told you that the stock will probably take support around this range at 217, which it did, right? So, well, I'm a smarty pants. But now coming to the real analysis, we can clearly see that we got this really big red candle over here around closing time, followed up by a big green candle which indicated somewhat of a reversal, right? Both of these were reversed. So this, of course, a big red body, big wick to the downside, big green body, big wick to the upside, right? This is a reversal scenario and it was true, right? The reversal did happen. We did open in a gap down, but after that we did take off. So if we talk about the numbers, we can see that we were in a gap down by about 0.20%, which is not that much if you ask me, but we are now up by 1% despite bad market conditions. This rally, of course, if you ask me, is being kind of carried by the Netflix stocks rally. The earnings report that Netflix released was pretty crazy. So with that, as you guys can see, we're currently getting resisted at this range around 222.6, where we got resisted over here as well. We kind of already, broke it, but we'll probably continue getting resisted all the way to $223. So let me mark that too. But now let's quickly jump into the 5-minute chart to analyze the live market. So now that we're in the 5-minute chart, we can clearly see that we hit a double bottom over here at $218.55 pretty much, right? We've already used that level as a support over here. And well, where did we use it again? Over here, right? And over here as well. I already told you in my previous analysis that this is a good support. After that, we did go all the way down until 217.65. If we look at the candle patterns, we can see that this candle over here was, a negative engulfing candle. So the bearish candle that was right next to this big body red candle was rather smaller than this one. So that indicated that we'll get a bear run. Of course, we hit a double top over here around 221.22 and went down, right? After that, we got supported at 217.65. And, after that, we went up all the way until this range that I already gave you at 222.62, right? And then we got supported over here at 220, which is an obvious level. Right below that, our support stands around 219.3, right? If we look closely at the candles, we can see that we got a reversal scenario over here. This scenario was, of course, followed by huge volatility and a massive, downfall, after which we got supported over here. I already told you that. And after that, we were continuously getting pretty much pin bar candle on the negative side. After we got those pin bar candles on the negative side, we kind of squeezed into this range again, right? And we did try to break out of it, but we could not. So the resistance on the upper side lies at around 221.51. But after we squeezed into this range, of course, we got resisted over here. But then this resistance pretty much caused this massive fall, right? We got an inside candle over here after a reversal scenario here. So we got a wick on the upside, selling pressure, right? A lot of selling pressure, then a lot of buying pressure, followed by an inside candle. So this is the perfect reversal pattern. And that, of course, happened over here, right? We got another inside candle over here, followed by pretty much just some normal candles, right? We did try to get a pin bar candle on the negative side over here, after which we kind of made a, not exactly a double bottom, but somewhere around 217.3. After which, of course, we hit a bottom and we started going up. After we started going up, we can clearly see that we got another pretty much inside candle over here. We got indecision that led to this massive breakout, right? And now, if we look closely at the market closing candles before getting into the 19th October candles, we can clearly see that we got another reversal scenario which indicated a positive outbreak. And as you guys can see, we got a gap down over here, but we still managed to, go up. After that, of course, we hit a double top over here around the levels of 222 point, just $222. Right, so let me quickly clear out all of these drawings so we can look at this more closely and in detail. So after we hit that, of course, we got two negative candles, an inside candle, another breakout, and the market is honestly very volatile today. I already told you that we're getting indecision and a support levels over here at 219.51, another support around, or rather a resistance around 221.86, which has now turned into a support, right? For these candles, a resistance seems to be forming over here around $223, another support over here around $218, but I doubt that we'll get to this level again. In my opinion, we should probably stay into this range and after that break out of this, probably get to 224 or rather 223.5. So this would be the next resistance on the intraday chart, right? We're getting a green pin bar candle, so this could indicate a further breakout. Of course, we'll get resisted over here somewhere, and after that, we'll get a pullback in my opinion, right? As I already told you, the market is kinda in an inside mode, so that should indicate further volatility, but a range bound market. If you ask me, this day will not be very interesting for long-term holders, but of course it will be interesting for intraday traders and swing traders, right? Not exactly swing traders, but just intraday traders and scalpers maybe. So you can try your luck over there. And of course, with a breakout candle, we'll probably get over here. I already told you we'll get a pullback. Once that pullback is done, this is what might happen, right? So if we get back into this range, we'll probably stay range bound over here because the support seems to be strong. But the pullback is already commencing, as you guys can see right here, right? The stock is coming back down to the $221.86 support, and now it's going up Again, as I already told you, increased volatility, but once it comes back to the $219 range, in my opinion, probably won't go below that, right? So around the market closing hours, I believe we might just break this again, right? Break out of this range, get into the $222 range, and I honestly believe that we might just end the day off above $220. If we get a negative earnings report, now let's consider that, right? So if we get a negative earnings report, we'll probably get a gap down into the $210 range. So let me mark that real quick, $210, somewhere around here, right? And then we might just break the $206 support as well. On the other hand, if we get a positive earnings report, we'll probably open in a gap up above the $230 range, and then we might as well just break the $235, $236 resistance. After that, 242. After that, around 250, right? That probably won't happen today, but I'm just giving you guys levels. With that, my analysis for Tesla remains the same: bearish short term, bullish long term. If we look at the current levels, of course, just revisiting them before we end the analysis, we can see that it's getting into the same condition, right? There's a lot of volatility, and as you guys can see, it will probably break this. So, see it for your own, mark these levels on your own chart. But again, remember that this definitely is not financial advice. You should always do your own research before you trade. If you enjoyed my analysis, be sure to hit the like button. If you did not enjoy it, be sure to hit the dislike button. You can subscribe to our channel Stocks 101 for more such videos. And as always, I will see you guys in the next one.